Welcome everyone to the Australian Bitcoin podcast. You're listening to myself, Justin, and Jeremy from Hardblock. Today we'll be discussing Bitcoin technical analysis and some global macroeconomic news. Remember to sign up using the discount link in the description below to receive free auto-send batch Bitcoin withdrawals for 6 months.
How you going, Justin?
Pretty good, Jeremy. How about yourself?
Yeah, pretty good. It's an interesting time at the moment. There's a lot happening in just generally in every asset class in the macro space. So we thought it was a good time to maybe put together a regular episode, just going through some charts. I've been looking into technical analysis for probably a decade, and I wrote a short ebook about Forex, which people don't do anymore because crypto is much more interesting.
Indeed.
But I thought this is a great chance to kind of bring that knowledge together and share it, because a lot of people are interested in the Bitcoin price, even though most people that we know focus on the fundamentals. But the price does help you feel better about it, especially if you bought a bit earlier and it's come down.
Absolutely.
So I thought I'd start with a bit of background on how I've developed my charting and the way I do my technical analysis. And then we'll go through Bitcoin, and then we'll go through some global asset classes and just kind of see what's going on, because you can tell a lot just from the price charts. So I've looked at a lot of different charts and I've followed different people, and I've come to the realization that simplicity is probably the key thing. I've seen charts where there's like a million indicators and you just have no idea what's going on. So most of them are derived from the same thing anyway. You've got the price and then some kind of average of the price, basically.
Yeah.
So I have the price. One of the things I think is really important is to use longer term candles. So at the moment on the screen you can see this is a weekly candles, which is how I do a lot of my charting, and I even use monthly candles to determine the support and resistance levels. I think it appears as though charts are fractal, and that if you ran like a 1 minute chart, it would look kind of similar to this, and you could do support and resistance. But those, to me, they're not very meaningful in the short term. The short term to me is more about traders and people on leverage,
scalpers and that sort of thing.
Yeah, but against whales. And so there's kind of this short-term thing where, like, if there's too much leverage, the whales come in and flush out the leverage and buy really cheap. And that's not really that relevant to the long term. In the long term, it's the fundamentals that drive the price.
Yeah.
So my kind of philosophy is I first look at the fundamentals, and then I look at the technical analysis to do the timing. So for me, the fundamentals, Bitcoin are pretty clear. Like, inflation comes down every 4 years. It works as a money, it has its own payment rails, and the current money we have is broken.
Yes.
So you've got the solution, you've got the problem, like the fundamentals are so clear. But, sometimes you might want to store some of your assets in Bitcoin and then decide, I need to sell a bit to get some cash to buy whatever food. And sometimes having the timing, having some guidance around the timing is useful.
That makes sense. So it's like the fundamentals is the direction and the technical analysis is the timing of that direction.
Yeah, the fundamentals are like, what chart should I be looking at?
Yes, yeah.
And then the chart tells you, roughly when. Now, before we go too far into it, I should say a disclaimer. None of this is any sort of advice of any kind, financial or otherwise. I'm not qualified in anything at all. So yeah, don't listen to me and make decisions, but definitely do your own research, do your own verification. That's the key to being a Bitcoiner, is
absolutely
learning how to do your own research. So
if anyone's listening on podcasting apps as well and are keen to see the charts that we're talking about, there is a video version of this as well, which will be accessible on YouTube. So if you're keen, have a look there as well.
Yeah, this is one where the video is definitely helpful. So also on my chart, you can see this purple line is a moving average. Again, I think longer term is better. So I've gone with a 52-week, which I found just seems to work on most of the charts that I look at.
Is that one of the Fibonacci levels, 52, or is that just close to it?
Just because it's a whole year.
Yeah, that makes sense. Yeah, of course.
That's sort of what seems to work. Then you can see I've got some support and resistance levels. Now, a lot of people think charting is kind of like hocus pocus, magic stuff.
It's horoscopes for men, I heard.
Yeah, I saw that on one of your podcast episodes, and it kind of does appear that way. Like, it seems like it shouldn't work. But I think it does a lot.
It does a lot of the time. Yeah, I say that as a joke because I realize there's a lot of, it's like a self-fulfilling prophecy. If there's enough rules that tend to, be conformed to, a lot of people will trade to those rules. Algorithmic bots will be programmed to those rules, which means the rules become real rules after a while.
But it's more than that. Like, in theory, markets should be efficient because there's knowledge out there. But in practice, they're very emotionally driven.
Yes.
And there's a whole heap of other factors. Like, many institutions have rules like they can only put 20% of their entire portfolio in one asset class. Within that asset class, they have to diversify. then they rebalance it every quarter, and so if something's over 20%, they have to bring it down to 20%.
Yep.
So that's why things like monthly closes, quarterly closes are actually very important. There's also leverage. So if you see what's happened recently in crypto, there's a point at which the leverage got flushed out.
Yes.
And all of those things together tend to just come and make these support and resistance lines. And for me, the key to support and resistance is to look at them from a really zoomed out perspective with monthly candles. So what I'll do, I'll just show you, I'm going to change this to a monthly chart. And I've got this in a log scale because Bitcoin doesn't really make sense in any other linear scale.
My understanding is if it's an exponential move, then log scale makes a lot more sense visually to look at. Is that right? Because you're looking at a percentage of the movement essentially rather than the...
log is like every line is 10x.
Yes.
Whereas normally it's like the same scale.
Yeah, one for one, basically, yeah.
Log is also quite useful if you're looking at, say, a 50-year gold chart, for example. It makes it easier to see. So I sort of switch between log and linear. I mostly use log. So you can see I've got some key support and resistance lines here, and I usually try and colour them green if it's support and red if it's resistance. One of the rules that I've learned is you shouldn't really judge a candle till it's closed.
Yes.
So you might see a candle go, oh my god, like it's massively below the support line, it's broken, and then it closes back above. So that you can't really judge it until it's closed. I personally still get excited sometimes when stuff like that happens, but you can look at, here's a good example of what happened recently. There was a wick down below this support line this is a monthly candle. It then went back up.
Yeah, so people might have thought, oh, look, it's closed below, but technically it's closed right on that support line, which means the support held.
That's right.
Yes.
So during the period, it's hard to make a call. You really just, that's kind of guesswork.
Yeah.
But when you see it close like that tells you that support line was important. So you can see the way I've drawn these support lines. I've got one right down at around, these are US dollars, 14,000. Another one, which is where we are now, at about just under 20. It's not exactly 20, just under 20, which was the previous all-time high back in 2017, which does seem to have held twice, like it's kind of sitting on it at the moment. And then there's a couple up here. And I try not to do too many lines across because it gets messy. Just trying to find the key ones. So the key resistance that we need to get through, later on is 61,400-ish. So from there, sometimes you can see trends, and potentially this is a trend line that we've got here. So there's 3 touches currently on this trend line. If it breaks through, that would be invalid, and I'd delete it.
Yep.
But it kind of looks like we're in this sort of upwards trend. And then the other indicator I use is called a momentum indicator. So there's a guy called Michael Oliver, actually just spent a week who does really excellent technical analysis, and you can look him up on YouTube. He goes on a lot of podcasts. He's more into gold and silver, but he also does Bitcoin analysis. You can buy his service. It's really expensive though. But basically, he's developed this method, which is essentially just a difference to the moving average. And his logic was, when you try and chart things over a long time, the base metric, like the dollar, is not a constant, right? Because they're printing so many of us. How do you compare like now to like 10 years ago? Because it's not the same unit of account.
True.
So by dividing the price by where the moving average, you're removing the dollar from or any currency from the equation.
Yeah.
And then you've just got what he calls momentum. And I find it surprisingly accurate. So what it is, you can just see this is basically the same kind of, these are called OHLC candles, like more old-fashioned ways of presenting open, high, low, close of the price relative to the moving average.
Gotcha. Yep.
So you're seeing this kind of oscillation above and below the moving average, and you tend to see that there are also support and resistance and trend lines in this momentum indicator. What's really interesting in this example is that Bitcoin has never gone below this green line here and a closed basis. These are weekly closes.
Yep.
Which is about 50% below the moving average. Which tells me that I think we're at support now.
Yes.
I think the price has bottomed out. When I say I think something, I think I'm like 80% confidence.
Yeah.
It doesn't mean 100%. So yeah, this is we'll get into Bitcoin in detail in a minute, but this is just an example of how the momentum indicator works. This purple line is 0. It means it's on that 52-week simple moving average. What's really cool about Bitcoin, the why we love it, is because it only goes down 50%, but it goes up, 200%. Actually,
that's right.
If we were part of the first bull market, which would have been heaps of fun. there's some serious 1,000% moves.
Wow, yeah.
Unfortunately, those days are over. But still, it goes up above the moving average much more than it goes below.
Yep.
Which is why we're invested in it. I've also kind of learned just in terms of charting that in the the short term again it's very unpredictable. But over the longer term, there are things that are structural that drive prices. So like demographics, just I guess sentiment around certain things like say green energy, for example. So those drivers are there for the long term, but charting is not going to predict, for example, like the 9/11 attack.
Yes.
Right. There's nothing in this
kind of like black swan events, I guess they could be called. Yeah.
Yeah. So there's nothing in here that's going to tell you this is definitely going to happen because you can't predict those black swan events, right? So that could change the world tomorrow. So yeah, but as I said, this is kind of a guide. This is how I've kind of over about a decade come to do my charting, and I find it's pretty accurate. Having said that, I thought 40,000 was a pretty good price for Bitcoin.
We all did. Yeah.
In AUD, sorry. And it's come down even more. So I'm not getting it right all the time. Definitely not. So yeah, let's move on to the Bitcoin price, and let's zoom out a bit. So we've obviously come a long way, and this is a really weird chart to look at. Even on a log scale, it's hard to fit in the screen. Let's go back to around 2017. When I saw, so I actually did think that this price here was about 32,000. I thought that was probably a bottom, but in fact, we broke through that. But I could kind of tell once I saw a weekly close below this, I knew that we were going down to about this price here. And in fact, I knew we had to get down to about 18 to flush out stops that would have been here. So another thing I didn't mention actually is a lot of the activity you see is because people have placed stop losses in their orders. So that means if the price gets to a certain point, people automatically sell.
Yep.
Theoretically, that's a way of managing your risk. In practice, it's like a target
for whales.
For whales and large institutions to target because they can see the orders.
Yes. Yeah.
They know that if they move the price to a certain point, that they're going to get a cheap sale.
Yeah, and I imagine if there's any low volume days or times, that becomes an easier thing for them to move the market one way or the other.
Exactly right. So yeah, actually, that's a good point because I didn't mention volume, which is the other indicator I use. So I've got my volume here, and that is actually a very important indicator to tell you if something is meaningful. And you notice there's a couple of big spikes in volume here. So this was one big liquidation that happened in May, big volume spike, and then another one happened in mid-June. So that tells me that a whole heap of margin calls were made. So there's a lot of activity, and so that leverage got flushed out once and then flushed out once more. So the people who thought they were safe here were probably, thinking everything was fine. Then one more flush out, and then 3 Hours Capital was out of business and all sorts.
Yes, yeah, exactly.
All sorts of stuff had just fallen over. So yeah, the volume is actually very important because if you see a move on say a Sunday night with very very little volume, it's not very meaningful. It doesn't really tell you anything. But if you see a move with very heavy volume like this, you're like, okay, that's a genuine move. Something important happened there. And often when you see this type of candle with a thin wick down and lots of volume, probably means what they call capitulation, where people have either been flushed out of their stop loss or they've mentally just gone, I can't
panicked and sold.
Pain anymore, and I want to get rid of this pain of feeling this loss.
Yeah.
And I'll sell so that the pain is gone.
The pain's not gone though.
Yeah, but actually we had. Yeah, well,
you're locking in the pain. Yeah,
you're locking in the pain. But we actually had kind of what looks like 2 capitulations. So again, but yeah, I think there was just it's a bit unusual because there was so much leverage in Bitcoin.
Yes, yeah.
That it had to be really flushed out the second time. So one thing I want to go to, and ultimately what we're doing here is just standard economics, supply and demand. So there's inventory of a product. This product is Bitcoin. There's inventory of that. It's created through mining, and the demand and supply indicate or dictate the price. A really good metric that I like to use or keep an eye on is the miner accumulation. This is off the Bitcoin Archive Twitter, but it does come from Glassnode. And what's interesting is that there was a lot of selling in kind of April through to May, maybe into June, but now the miners are starting to accumulate.
Yeah.
So that means there's less and less supply coming onto the exchanges. And so it's just another data point that says to me, I think the bottom's in.
Yep. I guess for context as well, miners, they collateralize their loans with Bitcoin and also with Bitcoin miners. As in like ASICs.
Oh, right.
And so the price of Bitcoin goes down, the price of Bitcoin ASICs goes down as well. And so they would need to sell some of that Bitcoin to then collateralize the loans further, or at least to make repayments. But yeah, once there is a bottom and they are like fully collateralized or collateralized enough, you would expect there would be, you know, an uptick the other direction instead, if that makes sense.
Yeah, that does make sense. I hadn't thought about the ASIC part of it. So what you tend to see in this sort of pattern is there's kind of two cycles in these longer term trends, which are called accumulation and distribution. Accumulation is when the kind of the smart money is buying. So that's institutions and large players, and they can't just go and buy $10 billion of Bitcoin. It would move the price, right?
Yeah.
So they have to place orders at probably this price around the 20,000, and just wait for people to sell to them.
Yes.
And that's when you see the articles coming out saying, "Oh, the death cross is coming and Bitcoin is dead." Try and change the sentiment, so they sell to the institutions. So what you tend to see in this in a pattern, you'll see. So at the top up here, you've got the distribution pattern. So the institutions were selling into the FOMO. See it move up, and often you'll see one more big move up where they try to encourage everyone to go leverage long, and just lots of volume going into that into here, so they can just basically dump on the market and lock their profits in for the year or the quarter or whatever. And now there's a sell-off phase, and now we're going to be back into this accumulation phase. Now I don't know if this long-term trend line is going to hold. Kind of seems to be at the moment. There's a support line here. We're actually right on it, which is why it looks yellow, because the price is on the green support. I think we're going to be in an accumulation phase for a few months towards the end of this year, and you'll see at some point, I don't know if it's going to hold, but at some point you'll see a move down potentially close to here, where people are starting to go short or leverage short, and then those people, when the price goes back up, will have to buy again with their stop losses, and that'll be the momentum to take the price into a new move up.
That makes sense.
I think, if I was to guess, that's probably happening maybe later this year. But it's going to be a few months of this kind of up, down, and then, But if you're buying anywhere at this price, I personally think it's a good price.
Yeah,
not advised.
Likewise,
Yeah. It is possible. There's a small possibility we break this and we go down to around 14,000 US. So again, if there's some sort of black swan happens, like something we can't predict, then that is possible. Anything is on the table, but it does look to me like the odds are we've probably put in a bottom. I would say.
These, like the accumulation and distribution patterns, are there like different types of theories behind them, or is like Wyckoff or Wyckoff, which is the one that I'm familiar with, is that the main one that tends to be used?
That's been happening for like 100 years.
Yeah.
So the Wyckoff is the one, and that kind of method around controlling the narrative. And just
scoop up good rates, sell it when everyone's like FOMOing and panicking to buy more, and then bring it back down.
That's literally been happening for over 100 years. Early 1900s, and it was stocks back then, but that same method has been going on. And even with stocks, like they have inventory, right? Like everything's all about inventory. And I'll just go back to the momentum. The other reason that I do think there's a bottom is because we've really never been this far lower than this below the moving average on the momentum. So for me, Bitcoin I think is hit a bottom, but then like if you zoom out. These little movements here, like I can't even draw it. They're so small because realistically we're probably going up somewhere like that. And it's even hard to see with so many zeros, but you're talking like millions of dollars there.
That's it.
So and that's why as an exchange we recommend the DCA. Like it is really the most effective way to just take the emotion
smooth out. Yeah, that's right.
But there are times when you might need to sell to buy a house deposit or something. And
absolutely.
It is good to know that when's a good time to sell, maybe when's a good time to buy a little bit.
Just as a tangent on that topic, a lot of people that are attempting to live on a Bitcoin standard, and when the price is high or when the price is going up, that's a very a comfortable thing to do. But when the price dumps like it is now, I've had a few people talk to me about how they're now considering like a slightly different method where they're going to be on a Bitcoin standard, but they're going to, on a regular basis, cash out 10%. So they can pay bills without having to sell Bitcoin at a 70% drawdown to pay their bills. So getting some of the timing right, or knowing when to buy and when to sell a bit, makes a lot of sense. And I think even for people living on a Bitcoin standard, that's still not an outrageous thing until perhaps Bitcoin's the world reserve currency in however many years, and then you can just operate on one. So
it's really not practical. Even sometimes I try and fund my Lightning wallet, and it's annoying when I've done that at double the price it is now.
Yes, exactly.
I don't want to spend $6 for my coffee when it would have been $3.
Yes.
It's not practical. But like as a general rule, and this is where the momentum indicator is quite handy. Is when you're above the purple line, that's when you might sell little bits. When you're below, that's when you might buy.
Yep.
In this case, you can go well above, but no one is really predicting how far. But that's if you do want to live on the 100% Bitcoin standard, it's tricky. All right, so why don't we move on to some other markets now? Let's just look at kind of the general macro framework. Because the US dollar is the reserve currency, let's start there. So just for the in terms of inflation, so the PPI in America, so that's the producer's inflation rate, which is a predictor of the future. It's currently at, when I say currently, in May it was 10.8%.
Yep.
It's around 11% mark. I think US CPI might come out soon. I'm not sure.
They did, and the press secretary of the White House said they're expecting very high numbers.
Yes.
So given they've been saying low numbers so far and the numbers have been high, now that they're saying high, I think the numbers are going to be higher. Yeah.
That sounds ominous. All right, so let's look at the US currency now. Now, there's this really weird index called the dollar index, DXY, which is actually just the dollar against about 6 other currencies, I think.
Okay.
It's like 50% the euro, but it tends to be what people look at when they talk about the dollar.
Your general strength of the dollar against a basket of other strong currencies makes sense. Well, I say strong currencies, but in quotations here.
So I just, that was probably too far to zoom out. Give you some historical context. So at the moment, it's actually made a huge move in the last couple of candles. So there's a monthly candle, so a couple of months. And just for context, like $1 is a lot in a currency because there's so much money tied up in these things. Go into my log. And so this line here, the support line, kind of it really goes back to there was a touch in 2017, and there's some touches in 2000. Like it's a pretty big support line in terms of historically. So
yeah, it looks like it's held quite well as resistance since about 2004. Looks like I tried to get through it like around 2016, middle of that, got rejected, and then almost again around like middle of 2019, and then now it's broken through.
Yeah, so I think it's a big deal that it has broken that.
Yeah.
Maybe you could argue that you put one here, but like it could be going as high as 119, which again is a big deal. And we'll come to what is driving that in a minute. But I just also want to show you the bond yields. So we'll just go through the currency and the bond yields at a few of the key markets. And we'll just scroll out a bit. So this is the US 10-year bond yield, the market rate for that. And you can see back in the 80s, I was up around the 10% range, and we've been in a downward trend for that entire time. And with bonds, the value of the bond goes in the opposite direction of the interest rate. So the bonds have actually been going up in value, the interest rate has been coming down. It looks like we put in a bottom in 2020, just after COVID, of around, this is the 10 years, so 0.5%. And then since when we've broken out of this trend line and we've actually broken through this support, and we're sitting around the just under 3%. That's a massive move from 0.6%. Like if you have a loan of that amount, and then all of a sudden your interest rate goes up 5 times.
Definitely, yeah.
So 3% like globally is actually a pretty decent interest rate, but not compared to whatever the CPI is about to come out at, 9%. So again, you're looking at a negative real yield of something like -7 according to the official numbers. In reality, it's probably much worse. But the US dollar is very strong at the moment. Like people are buying it. So we'll have to have a look. Okay, where's that money coming from? And this is why I like looking at the charts, because the money has to go somewhere. So if something's going up, something else is going down. It's flying, from different assets. At the moment, the US dollar is very strong. And it is probably the strongest of the fiat currencies.
Yeah.
That doesn't make it a great currency though. So let's go over to look at Europe. Now, as I mentioned, the dollar index is something like 50% based on the euro. So the euro drives a lot of it. Before I do that, the PPI in Europe, down in May was 36%. USA is 11, so 3 times.
Yeah.
And the CPI was 8.6, I think. I think that must have been for May as well.
Yep.
So that kind of tells you that the PPI that's coming in a few months is
kind of a predictive or a leading indicator.
Yeah,
and then
you're looking at like 20-30%.
Yeah.
Nuts. But first, let's look at the euro currency. And you can see this is the long-term chart, going back to almost when it launched, I guess, 02. So it's actually been in a pretty long downward trend. And this, Oh, wait, you can actually see the line moving down. That's scary because these are monthly candles.
Yeah.
I saw it move. This is a very important support. Where was a support line? Resistance line now. At about the $1.04 mark. And just to clarify, so this is the euro versus the USD. So when it goes down, the euro is getting weaker.
Yes.
And it basically hasn't been at this level since 2002. So it held in 2000. I mean, it held here in 2015. Held again in 2017, and now it's broken. And that's because there's not a lot of history to say where it's going to fall to.
Yeah, that's right.
Yeah, like you can't really judge from there. But all I can say is that's a very bad sign if you hold euros. I don't know if the momentum, if I go back to weekly, tells us anything. Let's have a look. Kind of indicates there's a lot further to go, would be my interpretation. Yeah, so that is the reason why the dollar is so strong, is because people are fleeing Europe.
Yes.
Selling off. So I think this has a lot further to go. One thing I do know is that I think it happened around in June. Russia started demanding rubles for the gas.
Yep.
The way they did that was they set up a company in Europe, I think probably in Germany, for their company to receive euros, and then within Europe they sold them, and they're buying gold and then sending to Russia.
Yep.
To buy rubles. So that's creating sell off in euros.
Makes sense.
But another factor is if we go look at the bonds, EU10. So if you ever do a look up bonds on like TradingView, just put in the country code like EU, US, then how long you want, and then just Y is the yield. So here's the EU 10-year term yield. And again, this is not a great chart if you hold these bonds, because if this is going up, the bond value is going down.
That's right, yeah.
So again, you can see like for the US, there's a long downtrend in the bonds. And actually, I should probably put a line in there. And it's just broken through here, broken through this kind of trend line here, and then again broken through another key support. So that held in 2012, 2013, and now we're sitting above it. But let's look at where this started. So this, around the COVID time, actually before COVID, this line here, I'm going to put a line in there just to make it clearer. And I'll just be pedantic and make it perfect. This purple line is 0% yield. So in April 2019, those yields went negative. I still don't understand who buys these, but anyway.
Yes, it doesn't seem like a great proposition, does it?
But for a couple of years, the bond yields on this 10-year were negative. They then broke through the zero in February of this year, and there was kind of this trend line for a couple of years. But you see, as soon as it broke through, their massive move up. So that tells you that they're being manipulated. So they're being suppressed down, and then once that breaks, bang, pop up. So they've gone from, it's almost difficult, I don't know how you would calculate it, because when you're, let's say your yield goes from 1 to 2%, your interest is doubling.
Yeah.
But it goes from negative to 1.2, people are making loans. I don't know, like it's got to be bad for them.
Exactly, yeah.
Going from there to now 1.2, but the PPI is 36%, and the bond yield is 1.3.
So you're running like negative around 30%.
Yeah, negative 35% yield.
Yeah.
So what are you going to do? Dump your euros and buy treasuries.
Yeah, that's right.
You need to buy bonds, and that's, I think, a reason why America looks good, but I think it's more that other countries are weak.
Yes, yeah.
It's not so much that America is strong. It's like, well, that's the best.
That makes sense.
At the moment.
And I have heard that theory quite a bit, where smaller currencies will collapse into a larger currency like the US. So although most people are predicting all currencies will just continue devaluing, there is quite likely going to be a strengthening of the US dollar as other currencies collapse, until the US then currency collapses itself. Whoever knows how long that'll be. But
So, if you are in Europe, this is not good, because they just can't afford to raise that anymore. Because like the higher that goes, the harder it is for people to borrow money, relatively speaking, and then to grow and so on. So, that's not looking good. I'm going to come back to some energy stuff, and I'll talk about Europe again there. But when I look at that and I look at the currency, it's really not a great sign. So now let's go over to Japan, which wouldn't always look at, but
I know what this one's going to be.
But because it's kind of a topical region, I'm going to go through it.
We just covered in the news podcast, which will probably be out around the same time as this, that the Bank of Japan now owns over 50% of all Japanese government bonds since starting their temporary quantitative easing in 2001. So they own over 50% of all government bonds. That's
it's nuts.
Crazy.
So in Japan, inflation is less out of control than Europe, but it's still 9% PPI. I think their CPI is 2.5. So again, that's going to catch up. So 9% PPI. Let's start with the currency first. This is the yen. This is the US dollar and yen. So when this goes up, the yen is weakening. It's the opposite to what we were looking at before. This goes back to 2002, and so some pretty key lines here, here, and here. So basically, this line here, which is 124, I think it's $124 per yen, hasn't been broken. I mean, it was the last time it was above that was 02, but it held in 07, 15, and we're now here in 22. One thing I will say about currencies is because they're both manipulated on both sides, like both sides of this have a central bank.
Yes.
I find them quite hard to, I guess, predict what's going to happen because you don't know how the central bank is going to react. But in this case, you kind of do because the central bank is screwed.
Yeah.
But the yen went through this line. I mean, it went through this, which was a key support, smashed through it. And normally you see like a pullback, no pullbacks, just smashed right through the second one and then just keeps climbing. So again, this is another problem because Japan imports a lot of energy and other things, and it's priced in US dollars, not in yen. So this is, if you think we're going to go through it, like the price of oil is going up, if the yen is also going down, there's this multiplier effect which causes the inflation that the actual Japanese people pay in yen to be even worse.
That's right.
I don't know where this is going to go because I haven't got this is new territory on this chart anyway. So some people use like Fibonacci retracements and so on. I'm not sure if they really work, but all I can say is, again, bad sign for Japan.
That's right. And this would be pushing up their yield, wouldn't it, for those bonds? Because if people are needing to buy, say, US dollars versus Japanese bonds,
Theoretically, yes. But in practice, it's being controlled.
Well, I think this is why the Bank of Japan owns over 50% of Japanese bonds, is because they're trying to do yield curve control. We'll buy it just to keep the price, not the price down, sorry, the yield down to this interest rate that they're trying to peg it to.
So their target is 250 basis points, which is 0.25%. And as I said, their PPI inflation is 9%. So again, why would you want to hold that bond?
That's right.
That sort of money on it. So the government is buying them, and like they did go negative for a while. But there's this key level, which I mean, the reason it's key level is because that's they're targeting it.
Yep.
There was an interesting time when it actually did break through, but they brought it back, got up to 0.4%. It's now back to 0.25. But typically, when I see a chart, now I might get a weekly for this one. When I see a chart, kind of, it's almost like a magnet. Like when something is drawn to a support level, it's like it's trying to push through.
Yeah.
And it's just a matter of time. I've heard on a podcast someone who I respect a lot talk about it might be 3 months away.
Yep.
But when this breaks, it's going to be very bad because this has been manipulated since I think the 90s. You know, like they had their big kind of peak in the late 80s, early 90s.
That's right. And I know they started quantitative easing to try to control the yield around 2001, and that was meant to be temporary. And I'm sure they were probably doing some level of quantitative easing, probably by a different name earlier than that as well, which is what you're referring to. Yeah.
Yeah. So when this breaks, it's going to be big. And as I said, so when the interest rates go up, the yield goes up, the bond value goes down. So if Japan is holding half of the government bonds on their balance sheet, the value of those are all going to go down when this breaks.
Yes, that makes sense.
As is going to happen for anyone who's holding Japanese bonds, which is probably like, I'm sure Australia holds some. Like, you know, I'm sure many central banks around the world are holding these bonds.
Because we generally hold them for like international trade. If we're settling in their currency versus ours,
it's one of the biggest economies in the world. So there's going to be a lot of risk for anyone who's holding these. And again, what do they do? They probably dump them and buy US Treasuries, I'm guessing. So they may want them stronger. But this is a very interesting one to watch because it's kind of talked about as the example of how, you know, central banking does work, and the MMT kind of crowd. This is the example they use.
That's right.
And I think in a few months they won't have this example to use.
Yeah, true.
So that's the main currencies I wanted to go through. Let's just have a look. Oh, did you have a question?
Yeah, I've got a fundamental question. So 50% of those bonds are held by the Bank of Japan, which means the other 50% are held by private citizens or companies, or institutions. I'm just curious, like, is that because of things that are maybe written into their I don't know what you call it, like their memorandum of agreement of what they're allowed to do with their company funds, where putting money into bonds is just like, it's an easy thing to do. Whereas if they said, oh, actually, we want to buy property instead, or we want to buy Bitcoin or something, there's probably a lot of like legal stuff to go through to be able to get to that.
They're very patriotic people.
Gotcha. Yeah.
And I think it's kind of been
like a cultural thing and like an honor thing. And yes, yeah.
I think they've kind of created this kind of propaganda type arrangement where you must do it for your national
Gotcha.
security.
That makes sense.
Yeah. So I think that's a lot of drive. I think a lot of companies own a lot of these bonds, but I think actually a lot of individuals own them as well. But they are very patriotic, and that's why I think their version of MMT has been able to go on for so long.
Yep, that's it. All right, that makes sense.
All right, let's move on to the metals. So these are all fiat currencies, but one escape valve is going straight into gold, for example. Now, gold is, you talk about supply and demand. Gold is actually highly manipulated because it's traded on exchanges, but not a lot of people actually. Supposedly, at the exchange, you buy a contract, and at the end of the contract, they deliver you gold. A lot of people just roll them over or pay cash settle it.
Yep.
There's a lot of trading that happens. They're called paper trading, which has nothing to do with the actual inventory of the gold.
IOUs, basically.
Yeah, and so there's kind of fractional reserve going on there. So over time they've been able to create extra supply that way. But if I zoom right out, and this is where log is actually quite useful. Gold is one of the charts that goes back a long way. So this goes back to 75. And you remember 71 is when the
Nixon shock
closed the gold window. Back in 71, it wasn't legal to own gold in America. I think it must have been sometime in the mid-70s when it became legal.
I think it was like 73 or something like that, or maybe 75 even.
Yeah. So you've seen like this massive move, 2000 to 2011. There's now this. It looks like what in technical analysis is called a cup and handle, which is a very bullish signal. Potentially, so that's a very long one. And then when that closes, I think we're going to see a very large move up. I've heard price prediction of like $15,000 US, which sounds like a lot for an ounce of gold, but who knows what that would actually buy.
True, that's right, exactly. Working in a world of hyperinflation, so that'll buy you a loaf of bread.
But if you
don't eat
look
bread
back
though.
long term, and Bitcoin is my number one investment in terms of me personally. I think risk reward, but gold I think is worth considering.
Yeah.
If you think we might have a move like this coming up, over the course of this decade. At the moment, gold is actually kind of weak, but that's because I'm measuring it in US dollars.
Yeah, that's true.
Because the US dollar is strengthening. So the US dollar is strengthening relative to gold. But if I, for example, changed it to Australian dollar, and I love it when you change the currency, the first one it offers you is 1 inch. You're like, who's ever going to... But anyway. So if you look at this chart, this is weekly candles on gold in Australian dollars. Actually looks a lot more bullish to me.
Yeah, it does.
It's
hasn't broken any of that resistance, that trend line up.
Yeah, actually that's a pretty long chart. Zoom in a bit. It's kind of condensed. The volatility has really come down. So I think gold is actually holding its own pretty well when you consider that almost every other asset class is down a lot.
Yeah.
In the last few months, gold is pretty stable in most currencies, just that the US dollar is strengthening. So it's actually been pretty stable for probably 6 months. Like it's not a lot of movement there. So we're not yet seeing. What we're seeing is money going from countries or regions like Europe and Japan into America. We're not seeing money flowing into gold. Like people are not panicking. There's trust in America. And there's trust in the American bonds, US Treasuries. There's some theories I've heard that the market is kind of pricing in a Fed pivot, which means that the Fed would start to lower rates again.
Yep.
And that's why that would make sense if people are willing to buy bonds, if they think the interest rates are going to come down again.
Yes, and that would push the bond prices up.
Correct.
Yep.
Because if you thought the interest rates were going to go up, you wouldn't buy that asset.
Yes.
Yeah. So that kind of indicates that maybe a few months from now they might pivot, which would indicate would align with the timing of why I think Bitcoin might go up. I read some really good research by a company called Mermacan Capital, which talks about that, because I think the US is actually in recession now, and the inventory is very high, and sales have gone down. So
Yeah, they had a negative 1.4% GDP in, I think it was either the last quarter or the last month, which I think that means technical recession when you have high inflation. And
technically it's 2 quarters in a row of negative.
oh, gotcha.
Yeah.
Okay, yeah, yep.
But you don't find out till afterwards. But the
True.
signs are that inventory is very high and sales are down, which makes sense because people have to buy petrol and
Yes.
stuff with their money and beef. So look, gold in AUD, it's not doing a lot. We're not yet seeing. When you see this go up, that you probably see that means the American flows will be going into gold rather than the US kind of treasury and US dollar. But at the moment, it's not doing a lot. I also like to look at silver because it's not really a macro asset, but I think it's if you do want to kind of hedge against Bitcoin, silver's a really good one because it's used industrially. A lot of electrical. It's a really good electrical conductor, and it's kind of leveraged to gold. It's a much smaller, it's a tiny market and massively manipulated. So again, there's a really good book. I think it's called The Big Silver Short by Chris Marcus. When that breaks, that's kind of like the Japanese kind of manipulation. There's a manipulation there. When that breaks, there's going to be a massive breakout in silver. But for the time being, silver looks like it's on the way down to probably this 1850 line, which if I scan out a bit, has really held since about 2008, 2010. There's a pretty key line there. So gold looks pretty stable. Silver looks like it's going to just correct down to here. And if you are interested in buying some silver, I'd say that green line, or even now, to be honest, 19 is a pretty good price. But around the sub 19, if you can get that, if you are interested in silver, it's probably not a bad price.
What does the momentum indicator look like for silver?
That's a good question. So it does look like we've broken through this support line. So if I look back, this is, turn that off, why is that there? Get rid of that. Yeah, so this support line has held most of the time, but it has broken before to around here. So maybe I'll put another one in there. Yeah, I mean the silver chart looks pretty weak for the time being. Like it doesn't look like it's going to break out anytime soon. There's not a lot of interest in it. So yeah, you might see this meander down to here potentially, but in other times it's it's stopped here. So it's hard to make a definitive answer.
Yeah.
Other than I don't think it's going to go up anytime soon. I think it's probably going to bounce around here. Would be my guess for a few months as well.
And again, would be relying on like the Fed pivoting to then lower rates again, and then people start moving into something like gold, silver, like harder money.
Yeah, well, it's kind of that, and also that at some point there has to be this psychological change where people realise we're going to be in a two-currency world.
Yeah.
Right. Earning this currency and I save in some other thing.
Yeah.
Gold, silver, Bitcoin, whatever. I'm surprised how long that's taken for people to cotton on to. Like I've not heard anyone talk about that. I hear people talking about how petrol is expensive and food is expensive, but no one yet thinking about, what about my savings? Like how am I going to conserve my savings? So when you hear people in the office talking about that, you'll know that this is probably going to go up, or probably already has gone up. So I think there's going to be at some point, and you mentioned that in India they were trying to tax gold because they could see that's the
That's right. Yeah, like they've doubled their import tax on it.
But yeah, silver's sort of an interesting one because it's physical coins, and there's just very limited supply chain capacity. So it'll run out very fast, and there won't actually be that much to buy. But I personally, to me, silver is my second most the thing that I think is probably the best after Bitcoin to hold because the risk reward is amazing on it. All right, well let's just jump over to some energy charts now because energy is really what drives a lot of factors in the economy. So we'll look at the oil chart, and this is such a weird chart because this is the one that went negative. Every time you look at it, you have to change the zoom on it. At the moment, oil's sitting at, this is in US dollars, $102. Now, very interestingly in oil, so the USA has a strategic reserve. So they actually bought up some oil, and they have been doing it for a long time when it was really cheap. And they hold it in case of, I don't know, wars and just to have.
Yeah.
They've been releasing something like 7 million barrels a week, around 1 million barrels a day into the where the futures are delivered in Oklahoma.
Yep.
So they're adding inventory they're creating extra supply.
Yeah.
So in America they produce, I think it's around 12 million barrels a day, and they're supplying another million.
Yes.
It's quite significant in terms of adding supply. But obviously that's not sustainable.
Yep.
So let's come back to this price. It did break out massively just after the invasion, up to 127. But it's been sort of hovering around this level above 100. Not even like kind of pushing back to the 92 level, even though America has been dumping inventory onto the market. So this price should actually be a lot higher if that inventory wasn't there.
Yeah.
I know that there's inventory levels in, I think it's in Oklahoma where they deliver this contract. Actually, this is the contract. Are very low. So yeah, I think this doesn't bode well for frankly anyone, because we all need oil to drive our tractors and trucks and cars and buses and so on.
That's it.
But if you look at it, for example, in say euros. Just have to change the zoom again.
Yeah.
It's significantly worse. Like you're looking at 100 euros for a barrel, and let's look at what was the price, around 57 prior to COVID, 50 to 57. So doubling in their currency.
That's right.
And as we've seen, their currency doesn't look like it's
It's not going to recover. Yeah.
Well, it looks like it's going down more. So this is why I personally think Europe's got some major challenges there, and I'll show you another reason why I think that. So let's go look at natural gas. So I mentioned before, natural gas, the price is determined a lot by where it is. Very hard to transport. You need very expensive multi-billion-dollar terminals to transport it. But it's gone up. This is the American price. So prior to COVID, we were paying. It was like $2, $2 to $3. I think this is million cubic feet. The units are really weird, but so it doesn't matter as long as it's the same unit.
Yeah, true.
So you're paying about $2. It then broke out to $9. And now it's pulled back a bit, but not even to this support line. Now you're paying like $6.50.
Still about 3 times more than you were 2 years ago.
Yeah. Now remember, natural gas is in an economy that has a lot of renewables. Generally, it's backed up with natural gas.
Yeah.
So natural gas is the kind of winter power source. And for many places in Victoria, for example, it's also a heating fuel. So that's a pretty major move. But then let's go look at the price in Europe. So I'm going to change this to USD.
Oh, wow. It's like comparison. I can see already it's about 10 times the amount of what it used to be a couple of years ago.
So this is in USD. So
I think more than 10 times. Holy.
This is like an amazing chart. This is better than any altcoin.
That's right, exactly.
Like in COVID with all the lockdowns, it was like down to $5. This is in megawatt hours. It's a different unit, I think, but
yeah.
Just the relative change is crazy. They basically price it. This is how much it would cost to actually turn it into power.
Yep.
So they were paying like $5 a megawatt hour. It's now $165 a megawatt hour just for the gas.
Yeah.
There's other costs in running a plant. Just the gas alone. What's also interesting is anyone that tells you that Russia caused the energy crisis, well, the invasion was here. The price went up here.
Yeah, that's right. And it's been going up exponentially for quite a few months and a year or so before that too. Yeah.
So you can make a better argument that the energy crisis caused the Russian invasion, not the other way around.
That's right.
So yeah, this has kind of been bouncing around, but just in the last couple of weeks it's started to move, which is interesting because it's summer there.
Yeah.
It's a very seasonal product. So I think they're trying to fill up their reserves, but yeah,
there's quite a lot of gaps up as well, in that chart.
It is a futures chart, so it's possibly not as liquid as some of the things. But
Gotcha.
Still, if your economy is relying on this to run, which a lot of them are, and it's just insane.
Yeah.
And this is why. So in the PPI in Europe, the figure is 36%, but the energy part of it's like 100%.
Yeah.
I don't know what's going to happen now. I fear it'll be a bit like Sri Lanka, which we saw this week.
Yeah.
Where a few months ago you mentioned that they didn't have the dollars to pay for their oil.
Yeah.
There were just oil tankers sitting there. This week the people stormed the presidential palace or whatever it is, and
that's right.
The president left.
Yeah.
I honestly think something of that magnitude is coming to Europe, because the energy, they need the heat. Like Sri Lanka's a hot country, right? Yeah. You don't need to heat your home, but in Europe, Northern Europe, you need to heat your.
That's right.
And people won't be able to afford to.
And if you think about the majority, or in terms of the proportion of salaries, middle income earners and lower income earners, the majority goes to food, fuel, and mortgage repayments. And now if you've got food and fuel going up with inflation and mortgage repayments, maybe over there not going up because they're not pushing the interest rates up.
But the interest rates went from negative to like 1. So
yeah, well, that's true. That is a huge move. So then you've got, your mortgage, your food, your fuel are all costing way more. And if they were already the majority portion of your salary to spend, people are probably at that threshold now or being overstretched. And this doesn't look like this chart's coming back down anytime soon.
It's not getting any better.
Yeah.
In fact, that was in US dollars. It's even worse in euros because their currency is devaluing. I mean, and this is before Russia turns off the gas. So I believe what's going to happen is, I mean, it depends if they cooperate. At the moment, Europe's talking tough, and we're not going to do this. We're going to sanction Russia.
Yeah.
But Russia's going to tell them that you're going to pay in rubles or gold.
Yeah.
And I think if they don't comply, they won't get any gas. And if they do comply, the euro's screwed.
That's it.
You know, they're kind of there's nowhere really to go from there. So actually, I have to put this back on log. Occasionally, some of the lines go to weird spots. Yeah. So this is really not a good sign. Personally, if you were planning to go to Europe in winter, I probably wouldn't. My tip. And this just looks like it's the implications is just mind-boggling. Like the factories that have to turn off. So as I mentioned before, natural gas is required to make fertilizer.
Yes.
Among other things.
Yeah, it's all the transport. It's their infrastructure basically, and all of that. If that goes backwards, then you have less investment in something like natural gas.
Yes.
You can't create more supply unless you actually have an income to be able to put something in.
Like a death spiral.
Yeah.
So then let's look at coal. Now this is the futures. It's actually in Europe. I think I'm not such an expert on coal, but I think this is actually like Newcastle in Australia. Again, this would have been a good one to invest in. So back COVID times, I mean, it's probably not fair to use COVID. Let's use pre-COVID. Paying about $90. I think this is for a ton of coal. This is US dollars, $90 US.
Just a casual 4 times that amount now.
$428. So 4x. Yeah. So that's your backup to your gas.
That's right.
Coal. Like this is the last resort in terms of coal plants on and burn it. And unlike gas, it's very easy to ship coal. You just dump it in a ship. So if the price is this much in Europe, eventually arbitraging will happen, and that will be the global price.
Yes.
So we're unfortunately going to feel that here, which we already are. We've seen so much happening in the energy markets here that I think Australia produces half or possibly more than half of its electricity with coal.
Yeah.
So that's going to cause problems here and frankly everywhere.
You look at even like the volume, that 2020 candle, that huge green. Sorry, not candle, but the volume stick down the bottom. That's almost twice as much of any kind of green volume in that last sort of 3 or 4 years.
Yeah.
You can tell that's like a sustained move upwards.
And the scary thing is, again, you sort of see that like magnetic attraction to this line. Where's it going to go? Like this is coal. I just stick it out of the ground.
Yeah, that's right.
But it's so hated that no one's been able to invest in it.
And that takes years to undo, doesn't it? It takes like even a decade or more of investment properly into sound, reliable energy to be able to kind of create a supply dent to something like this.
Absolutely, because you need to build things like train lines.
Yeah.
And buy mining equipment and ships and so on. Like you can't just get them off the shelf.
Yeah.
So that's again like where do you turn from there? It's not a great sign. So I thought we'd just finish. I have no idea how long this is going, but I thought we'd just finish quickly with a couple of food commodities. So I'm just going to look at wheat, even though I don't eat wheat. A lot of people do.
I believe that carnivore conversation for another time.
This is the price of wheat over time. And you see, it was up pretty high in 2012. I think that's when the Arab Spring was. And now it has come down. This was a pretty key line, the 590 per whatever it is, bushels per something or other. That really moved out and then way above this line. It has corrected down now. But if you look in terms of like, I don't know, let's say we take this price mid-September. The price did double. It has pulled back. 50 to 100% increase on wheat.
Yes, that's right.
A lot of people, that's a lot of their calories are coming from wheat. And
Yeah.
I won't go through them, but there's a heap of other commodities you can look at. And the final one I want to look at is urea. So there's different ones. But
It's used in like fertilizer and that kind of thing, isn't it?
Yeah, so that's basically nitrogen fertilizer.
Mm-hmm.
And you need natural gas to make it. Now, this is obviously not as liquid a chart as other things, just specific Brazil urea, but only this year, last year, 2021, even late 2020, we're talking 277. It's been up as high as 800, now down to 630. But these are not like 5% increases.
Yeah.
It's like 2-3x on things that we need to eat.
That's right.
And to power our world. So.
And without a seeming end in sight, like there's not like a real obvious solution for this in terms of increasing supply, because it's not that simple as just like making more of it.
No.
There's so many supply chain, constraints on something like that.
Yeah, I mean, basically the lack of investment in oil and gas has driven all of this.
Yeah.
And that's been over a decade.
Yeah.
And so now you have to actually start getting the money, going and drilling, and then getting the permits. Like that's a multi-year process. So yeah, this is not going to undo in a hurry. But yeah, so the countries that have the resources, which thankfully we do, Australia exports a lot of natural gas. We import oil, but we export natural gas and coal, are going to be okay, going to be protected. But the countries that have to import everything, Sri Lanka, Europe, Japan, you see it in their currencies.
Yeah, that's right. It makes sense. The more they need to buy of someone else's good, the weaker their currency becomes, and the stronger something like, say, the US currency becomes.
Absolutely. Yeah, so that's all I had. I thought maybe in future, if people have questions, they could,
definitely
message us on Twitter. Potentially, we might do this as a live stream.
Yeah.
If there's specific charts they want us to look at, we can do that, or if there's specific questions. But yeah, the idea is to make this kind of a regular monthly session.
Yep, absolutely. Well, thanks for your time, and definitely anyone who is keen to have us go over certain charts or answer a specific question or give context to something, leave it in the comments or reach out, particularly on Twitter, hardblockbtc, all one word, and we'll make sure we cover it in future.
Cool.
Otherwise, thanks very much. If you can leave a review on the podcasting app that you listen to and you think this has been worthwhile, then please do that. It does definitely help out the podcast, and feel free to share it around if you think this could benefit someone. Thanks for your time again, and until next time.